Welcome, my good people. Today we're going to concentrate more on what capital income tax, which is the CIT. Yes, it's one of the questions that most of the times likely to show up in your exam. Now we're going to do the finance out 2020 all to 2022. So we're going to give you the latest update in this lecture. So without wasting much of your time, let's dive in. Now let's start. Company income tax. What is company income tax? Most of the times you don't see this question, what is company income tax? But who knows? It's good you know what it is all about. Now, company income tax are form of taxes imposed on the profit or income earned by corporation and businesses. It is a direct what? Tax on the net earning or profit of a company. The rate at which this is applied can vary from country to what country, and the tax rate also depend on the size and type of the business or company. Now, just put this definition in your mind. Now, the way Nigeria operates its own is different from the way other countries operate their own. The rates are never the same from country to country. The mode at which they apportion the tax rate to each of their businesses differs from country to country. They make it in such a way that it suits into their economy. Now, for Nigeria, this is what they came up with. The classification, threshold, and the rate. Now let's look at the rate at which Nigeria is what? It's apply now. For small company in Nigeria, you must have made 25 million naira and below of your what? Your your revenue. The total revenue you made for that year must hit 25 M or below. 25 M and below, then you pay 0% of the CIT. Your company income tax, you pay what? 0%. That is to say, you are not paying anything. It's a way of encouraging small businesses. Somebody once asked me a question that I should make a video on how to file nil, CIT nil. Please, we don't file CIT nil. It is from here now that you know if you are going to pay any amount or you are not going to pay. Once you hit 25 million naira and below, you are still going to do what? So file your CIT with your revenue that you realize for that year. Then at the end of your filing, the tax promise will generate what you will pay. So when you enter an amount 25 million naira and below as your revenue, the tax promise will automatically generate a nil payment for you. But there are some other minor, like police trust fund, NITDA. It's just a minor payment. About some is 0. Some is 2 naira, some is 1 naira that you just have to pay. But just to it that you're not paying for your CIT because you have been exempted because you did not hit, because you fall within the small company. Now, the middle company must earn 25 million, must be above 25 million, but less than what? 100 million. That's to say, it must be above 25 million and it must not get to 100 million for you to enjoy 20%. If you hit 100 million or above, you're not going to enjoy 20%, you're going to enjoy 30%. All of them is enjoying it. So medium company enjoy 20% where they hit above 25 million and less than 100 million. Now the big company here, you must hit above 100 million and above that you paid 30%. It's just a way of encouraging businesses, especially the small and the medium businesses, to grow. Now, when you are into a business and your turnover for the year is about 15 million naira, they say, okay, since you've hit 15 million naira, compute your tax. But with the tax authority, the FRS will not charge you any amount of money. Why? Because we want you to grow in your business. Then the medium company, where you hit 26 million naira, but less than 100 million, they will say, okay, since you are growing, maybe you hit 76 million, 89 million, they'll say, okay, to encourage you, just pay 20% as your company income tax. Now, it is not 20% of your gross. No. What you computed, your assessable profit for the year, is what you do. What you pay 20%. Now, for large companies, they say, oh, you people are good. You people are very good for that. Let's just give you 30% of your assessable profit. So you're going to pay 30% off. After your computation, everything, you just pay 30%. Now, let's take a look at this. When compute CIT is equals to percent, whichever percent you fall in of your total profit. There is a way we'll compute it. We'll get there. I'll show you the format. Then EDT is 2.5% of accessible profit. These two things are different. I'll explain it where we'll get to the format. Now, mind you that your EDT, education tax, initially was 2.5. That is when you follow the 2019, 2020 to 2021. It keep from here. It increase. As I think as 2021, it was increased to 2.5%. But as at 2022 Finance Act, they increase it from 2.5% to what? 3%. So this is the current rate for your EDT. So take note of this. This is the current rate for your EDT as at Finance Act 2022. So it's very important you know that. So your minimum, this to complete for minimum tax. Now, let me just give you a brief explanation of minimum tax. This minimum tax, how do I explain it to you to understand? Now, just listen. The least amount of tax that you have to pay, that is the minimum tax. The least amount of tax that you have to pay. After they must have cross-check, you did not meet this, you meet this. Okay. Now, 25 million is a criteria for you to pay 0%. Now, maybe in your business now, at the end of the day, you hit your resource of income 20M. You know, with this, you are supposed to pay 0%. This is your resource of income. Then you have what is called other income. Maybe you dispose your property for 5 million. You made another income from whatever source again income 10 million. Now if you sum this, it will give you what? 35 million. Now technically you've hit above 25 million in your when you sum up the whole of your income. But in this case, they are not going to apply 20% because your main source of income did not hit above 25. Are you getting it? Now what you will not be entitled to is minimum tax. That is what you will pay. Well, we'll get there. I will explain it better for you. I just want you to have a picture of it. And the formula is what? The formula for minimum tax equals to is 0.5% of your gross turnover. Your gross minus franc investment. So we'll come to that. Now, so that is that about. Now let's look at minimum tax. Company that are exempted from the minimum tax that I just explained. Company with gross revenue of less than 25 million naira in the relevant year of assessment. I've discussed that with you. Once you did not hit this, you are not going to, you are exempted from minimum tax. Once you did not hit this, you are exempted. They will say no, don't pay minimum tax. But with the condition I've explained to you, if your other source of income are entered, applied, then you might be asked, depending on the kind of your business, to pay for your minimum tax. Company carry out agricultural businesses or trade are exempted from minimum tax. This is a way of encouraging people to go into agro business. So if you are carrying out any business in the agro section, you are exempted from minimum tax. They'll say don't pay any amount for minimum tax. Now, company that has not been in business for more than 4 calendar years of its commencement of business are exempted from minimum tax. Are you with me? They're exempt. Maybe you started a business 1 year, 2 years, the 3rd year, you're exempted from minimum. This tax is a way of encouraging you to stay up to date, to stand firm in your business. So that is that. Let's look at franc investment that I earlier mentioned. Franc investments are dividends received by one company from another company after the deduction of withholding tax. Dividends received from one company to another company after deduction of withholding. That is your franc investment. Now note, any dividend received without deduction of withholding tax will not be deducted from the gross turnover in computation of minimum tax. If withholding was not deducted, you cannot deduct it in computation of your minimum tax again. Just take note of that. We're going to do a practical example of that. But just know that when your gross is 10 million, you are not, when deducting what you're supposed to deduct, you are not going to deduct it because from your gross, because withholding have not been deducted. Noted. Good and fine. Another one, where the franc investment income did not form part of the gross turnover, it should not be deducted from same in the computing of your minimum tax. Hope you understand that. When it is not part of the gross, then it should not be deducted from it. Just take a picture of it, just understand it the way it's going. We'll get there and a better explanation will come up. This is just a theoretical aspect for you to know everything about CIT. Minimum tax is to be levied and pay shall be what? 0.5 of your gross turnover of the company. 0.5. But there is an exception to that. 0.5 of the company less franc investments. We've just defined franc investment income. Based on Finance Act 2020, the minimum tax is to be computed at 0.25% of your what? Gross turnover, less franc investment income for assessable year falling due between January 1st, 2022, December 31st, 2021. This is where I want you to list it. Now, if your accounting year fall within these two, 2020, 2021, you have to pay 0.25 for your minimum tax. Maybe you did not compute it on time. Maybe you decided to compute it now and go to tax office to do one or two, and it fall within 2020 and 2021. You are going to pay 0.25, but the standard rate for minimum tax is 0.5 of your gross minus your franc investment. Is that clear? Good. Here. So this is the formula. Just get use of this formula. It's very simple. When a question is set, you have to watch the question clearly to know if the basis you are going to use to compute it. You don't just rush and start computing. Now let's look at the basis. We have what? The normal basis. We have what? The normal basis. Now the normal basis are those bases are the normal rates in which they compute. You give it to the tax authority, you follow due process, and the tax authority are not suspecting anything, and you did not fix up anything that is suspicious. They'll say, okay, that is the normal one you are going to use. But we'll also have other basis of assessment, like when the tax authority, they are looking for ways now to make money. They are suspecting you. Maybe you doctored this account, you do this. They will now apply other basis. So it depends on the question they set. Then you can now identify or deduct what they are really asking you about. I just hope you are getting me. Just hope you are getting me. So let's take a look at the basis. Other basis, apart from the normal one, other basis are the minimum basis, minimum tax basis, which I've explained earlier. Once you submit your tax computation, the tax authority will look at it I say, but this guy did not hit 25 million, okay? But other incomes, if when you sum up other incomes, they are hitting about 50 million. This guy will not just go like that. You have to pay minimum tax. Then they will not compute it. The tax authority will now recompute it based on their own discretion that is fair. The turnover basis. The turnover basis here now, after you must have compute everything and you give it to the tax authority will say, how come your income is so amount? How come your expenses is so amount? They are suspecting something there. They say, no, we cannot go with this your computation, with this your normal computation. We cannot go with it. We have to do something about it. Then the tax authority will not say, okay, let us apply a fair percentage on the income and the expenses so that we will recompute it, because what you computed, they are not in line with it. So they have to recompute, because they have experts also. They have to recompute it. Are you getting me? And they will not apportion some percentage to your turnover, add or deduct from your expenses, add or deduct, a very fair ground that everybody will enjoy. Now, dividend basis. This has to do when you pay out dividends from your profit. Now, when you pay out dividends from your profit, yes, when you pay out dividends, when you pay out your dividend from your profit, and as a result, there is no accessible profit again that the tax authority can enjoy. No, the tax authority will say no. The dividends you paid out, we are going to do what? Charge it. So they will now concentrate on those dividends. Because are you supposed to pay out your dividend from your profit? Are you supposed? You just make a research on that so that you understand it better. Now, when a dividend is paid out of profit, the dividend will be charged. The tax authority will concentrate on the dividend. Now you understand. The dividend, they are the share of the shareholders. They are giving them their money because the business makes so profit. Yeah, you take your share, you take your share. But at the end of the year, when computing for tax, they now made a report that there is no accessible profit. There is nothing to pay for tax because they use most of the money to pay for their dividend. The tax authority will say, no, you don't do that. They will not charge the dividend. Because normally, after you paid your tax, you deduct your tax, whatever is remaining as your net profit, then you can share. Not using our own money to pay for dividends. You understand? But when this dividend is paid from retained earning, it is not charged. When it's paid from retained earning, it is not what? Charged. Yes, you can pay your dividend from your retained earning. But once you paid it from your profit, you will apply dividend basis on it. So therefore, when we solve a question on that, you will understand better. So I just want to pinpoint those aspects that you needed to know. Now, let's look at the format. Very important, so that we'll round up. Yeah, this is the format, normal basis. This is the format. Your net profit. Now, the dividends was telling you about was paid out of this net profit, and as a result, let's assume here becomes nil. What are they going to assess again? Nothing. So that is why they will now fall back and use dividend basis. Add disallowable expenses. I made a video on allowable and disallowable expenses, so you can check it out. Depreciation, capital allowance on shares, rent disallowed, donation, authorized donation, general provision for bad debts. These are what? Disallowable expenses. You add it together to give you this. There is some. Then you less what? Profit on sales of PPE, the plant on the equipment, profit on export sales. Now, mind you, it's not a must that all these things must be there. It depends on the question they set for you. Then you can pinpoint all these things out. Now, non-taxable income is the next one. This is just a format. Interest on agricultural exempted loans. Here will not give you what? Your accessible profit. Less relief. Do you have any relief? If you have any relief, then you less it. Less investment allowance. Now take note of this. Investment allowance. Finance Act 2022 has scrapped out investment allowance. There is nothing like investment allowance again. We're computing for your capital allowance. You just go straight with your annual and initial allowance and compute. Investment allowance has been scrapped by Finance Act 2022. Yes, I purposely put it here. So this one will not be among when computing for your tax. You don't need to include this again. Then you less your capital allowance. Then you get your total profit. Now, this capital allowance, I did a video on it on how to compute for capital allowance. So it's what you computed there that you just bring in here. Then you walk home with it. Now the tax rate, let's refresh us with the tax rate again. For small company, 0%. For medium company, 20% of what? %20 of your total profit. So now let's use this as an example. When you make a profit, when your turnover did not hit 25, when your turnover is 25 million naira and below, you must have computed your CIT just like this format. Then here might be reading, some figure might be here. Then you just apply 0.0% of whatever figure that is there, which is 0. And that is the tax format we generate it for you. Then for medium company, 20% is not on the revenue, but revenue is just a threshold at which you will stand at. But now the 20% will now be your CIT on your total profit. You will now charge 20% on this. For large company, 30% of your CIT will now be charged to whatever you generate here after your computation. Now, your EDT will be charged here as accessible profit. Your EDT will be charged here, then your CIT will be charged here. Is that okay? So this is all we have for when it comes to CIT. Hopefully we're going to do video on how to navigate these bases, the minimum, the turnover, and the dividend basis. Hopefully we'll do a video on that. if necessary. But I know it's necessary. I know it's necessary. So if you need a video on that, just let me know so that we'll go ahead and do it as fast as possible. What do I have to say again? But to say a thank you, a very big thank you for watching, and I hope this tutorial has enlightened you a little, has exposed you to some things about CIT. Stay tuned to my channel, and God will keep blessing you, and we shall all succeed in this career that we have chosen. Thank you very much for watching. I'm Mr. Israel. Thank you.